Hello, in this video I will show you how I would do bookkeeping for a real estate investor having rental units let out to tenants. Later I will even show you the bookkeeping for recording flips. We start with configuring a handful of settings. We click on the gear icon at top right-hand corner. Click Account and Settings. In the Advanced tab, we first select the cash or accrual basis of accounting. We'll follow accrual in this example. Next, under Customer Label, we select Tenants. Under Categories, we select Track Classes and Assign Classes. In Automation, we turn off Automatically Apply Credits. Click Save. Then on the Expenses tab, we turn on Track Expenses by Customer and Make Expenses and Items Billable. Click Save and we're done for now. We'll assume this is the first time we are recording in QuickBooks Online, so we'll first pass a journal entry to record our asset, which is our building property that we have rented out, in our books. To create the journal entry, we click on Create at the top left-hand corner and select Journal Entry under the Other column. We'll choose January 1st, 2026 as the date of the journal entry. QuickBooks Online already has ready-made several accounts for us that we can use. In the first line under Account column, we'll select Buildings, which is already ready-made. For this example, I'll just use a random amount of $500,000 which I'll enter in the debit column. In the next line, we add land for say $100,000 in the debit column. Next line, we'll add the accumulated depreciation for the building and again, just for the example, use an amount of say $35,000 in the credits column. Please note there is no depreciation for the land portion of the property. Next, if we've taken a mortgage for the building property, we'll have to add it here. In this example, we'll say we have a mortgage from Chase Bank. We will need to create an account for this, and we can do so by clicking on Add New in the column. A new account window will pop up where we can enter account name. We'll say Chase Mortgage for this example. In the account type, we'll select Long-Term Liabilities. And in the detail type, we'll select Notes Payable. Click Save. We'll put $500,000 as the amount in the credit column for this example. In the next line, we'll add the amount for the owner's equity, which is basically the owner's financial stake in the business. We have to create a new account for owner's equity. The account type will be equity and detail type will be owner's equity. Click Save and Close. We'll use the balancing figure of 65,000 as the amount of owner's equity. Once we're done, we click Save and Close. We shall now record the rent as well as the security deposit received from the tenants. We create an invoice by clicking the Create button on the top left-hand corner and select Invoice under the Customers column. We shall add the first tenant's name as Unit 1 John and click Save. We select January 1st, 2026 as the invoice date. In the product or service section, we will need to create a new service item called Security Deposit. Click Add New. In the pop-up window, we type Security Deposit in the name box. Next, we have to link this service item to the Security Deposit liability account. Scroll down to the Sales section, and in the Income Account box, we select Add New. Type Security Deposit in the account name and select Other Current Liabilities in the account type and detail type. Click Save and Close. In the Amount column, we'll mention $10,000 for the security deposit. We will use Class to track the income, expense, and security deposit for each rental unit. Under the Class column, we'll add Unit 1 as the class. In the next line, we will add the rent received. First, we have to create a service item for the rental income. Click Add New. Type account name as Rental Income. Next, we have to link this service item to the rental income account. In the Sales section, we click Add New Account. We type Rental Income in the account name. Select Income in the account type. And Other Primary Income in the detail type. Click Save and Close. For this example, we type $2,000 as the amount of the rent. We select Unit 1 in the Class column. Click Save. If several months' rent are received in advance, the advance portion should be recorded as a current liability, such as deferred or unearned rent, under the accrual method, and then recognized as rental income over the relevant months. To record the payment received for the invoice, we click on Receive Payment at the top of the invoice window. Select the tenant's name. In this example, it's Unit 1 John. Select the payment date. In the Deposit to box, we have to create the bank account. We click on Add New. Type the name of the bank. In this example, we will use Chase Operating Account. The account type will be Bank Account. And the detail type will be Checking Account. Click Save and Close. Click Record and Close. Next, we'll create the invoice for the second tenant in the same way. Click Add New Tenant. In this example, we'll type the name as Unit 2 West. Click Save. Select the date as January 1st, 2026. In the service column, we first select security deposit, which we have already created. Amount $10,000, and this time in the class we will add Unit 2. Next, we'll select the next service item, rental income. Amount $2,000, class Unit 2. Click Save. Next, we'll receive the payment for the invoice. Click on Receive Payment. Select the date. Deposit to Chase Operating. Click Record and Close. We'll repeat the same process for the third tenant as well. We use Unit 3 Garcia as the tenant name. We add Unit 3 as the class. We receive payment for the invoice like before. The security deposit of $30,000 collected from the tenants needs to be kept separate from the operating account. We create a new checking account for the security deposit and transfer the amount to it. Click on Create, and under the Other column select Transfer. Under Transfer Funds from, we select Chase Operating Account. Next, under Transfer Fund to, we select Create New Account. Add the name as Chase Security Deposit Account. The account type will be Bank Account. And the detail type will be Checking Account. Now we'll have a look at the balance sheet. As you can see, we have the two bank accounts, Chase Operating and Chase Security Deposit, with the correct amounts recorded. The building account under Fixed Assets and Accumulated Depreciation. Under Other Current Liabilities, we have the security deposit correctly reflected. Next, we'll have a look at the profit and loss statement. We have rental income showing $6,000, which is the correct amount. Sometimes, we incur expenses that are the tenant's responsibility and therefore reimbursable. We mark those expenses as billable to the tenant and add them to the invoice. We first record the expense. Click on Create and click Expense under the Vendors column. Under Payee, we enter the vendor's name. Payment account will be Chase Operating. Select the payment date. Under Category, we select the expense account. For this example, we will use supplies, which is already ready-made by QuickBooks Online. After entering the amount, we click on the billable box. Next, select the name of the tenant who is responsible for the expense. Select the class and then Save and Close. Next, we create the invoice for the rent of February month. Once we select the tenant's name, the billable expense we recorded earlier for the tenant pops up on the right side of the screen. Click Add to include it in the invoice. We record the rent in the invoice and receive the payment like we did earlier. We repeat the process for the other two tenants. Once we're done, we will have a look at the balance sheet. We can filter the balance sheet by tenant as well as class to track the details. The profit and loss statement shows the new supplies expense and the reimbursed billable expense income. When the tenant leaves the premises, we need to reimburse them the security deposit. To record the same, click on Create and select Refund Receipt under the Customers column. Enter the tenant's name and refund date. In Refund From, we will select the Chase Bank security deposit account since that's where we have kept the security deposit. In the Product Service box, we enter Security Deposit. Enter the amount and class and click Save and Close. We can verify the amount is refunded in the balance sheet by checking the amount in the security deposit account under Current Liabilities. Note the security deposit bank account also matches the amount in the liability. We can further filter the balance sheet by tenant to verify the individual tenant balance details. It may so happen that the landlord will need to retain or forfeit part of or the entire security deposit amount to cover repairs or damage caused by the tenant. We can record this either with a journal entry or directly with the refund receipt. Under Journal Entry, we first pass a journal entry to record the security deposit forfeiture. Select Journal Entry. In the first line, we need to add and create a new account called Security Deposit Retained or Forfeited. The account type will be Income and the detail type will be Other Primary Income. In the next line, we select the Security Deposit Liability account. Enter the amount of security deposit retained in the credit column and the same amount in the debit column next to security deposit. Select the name of the tenant and the class. Click Save and Close. We can see the impact of the journal entry on the balance sheet. If we filter the balance sheet by tenant, we can see that security deposit for John has reduced by $500 from $10,000 to $9,500. We can also have a look at the profit and loss statement and see the security deposit retained is shown as an income. Now we'll refund the remaining security deposit to John by using the refund receipt. Instead of using journal entry, we can also record the security deposit retained directly from the refund receipt window. We'll do so for the third tenant, Garcia. In the refund receipt window, under the product or service column, we will create and add a new service item called Security Deposit Retained and link it to the Security Deposit Retained income account. In the amount column, we show the amount retained as a negative figure. In the next line, we include the entire amount of the security deposit. Click Save and Close. We can see the impact on the balance sheet and profit and loss statement. The retained amount of security deposit has to be transferred from the security deposit bank account to the operating bank account using the transfer window. We will now record the monthly mortgage payment. This is done based on the actual receipt, but for this example we will record the usual items included in the installment amount like interest, prepaid expenses, and the principal amount. Click Create and select Expense under the Vendors column. Select Chase Operating as the payment account. Under the Category column we create and add a new expense account called Chase Mortgage Interest. The account type will be Expenses and detail type will be Interest Paid. Next line we will create and add a new prepaid property tax account. The account type will be Other Current Asset and detail type Prepaid Expense. Next line we will add new prepaid insurance account in the same way. Next line we'll record the principal portion of loan repayment. We shall select the Chase Mortgage Liability account in the Category column. Enter the amount. Click Save and Close. We can see the effect on the balance sheet. The Chase Mortgage Liability account has reduced by $890. In the profit and loss statement, we can see the Chase Mortgage Interest under Expenses. We will now record depreciation on the building asset. We do this through a journal entry. In the first line under the account column, we select Depreciation Expense Account. This account is ready-made by QuickBooks Online. In the second line, we select Accumulated Depreciation Building Account. This account is ready-made by QuickBooks as well. In case your version of QuickBooks don't have these accounts ready-made, you can create these accounts by clicking Add New. Enter the amount and click Save and Close. We can see the impact of recording depreciation in the balance sheet under the Accumulated Depreciation Buildings account and in the Profit and Loss statement under Depreciation Expense. Those are the main aspects of bookkeeping for a rental income property. Now, let's look at bookkeeping for a fix and flip real estate business. It's best to keep separate records under a different LLC for fix and flip activities. For this video, we'll use a different accounting year, 2025, to distinguish it from the rental business. We'll assume the fix and flip business is starting from scratch, beginning with recording the investment of funds for the down payment on a property to be purchased and renovated. Click on Create, and select Bank Deposit under the Other column. We'll use January 1st, 2025 as the date. Select Chase Operating as the account. In the Received From field, you can enter the owner's name, but I'll leave it blank. In the Account field, select Owner's Equity. Then, enter the amount and click Save and Close. Next, we'll record the purchase of the fix and flip property. We'll do so using the journal entry. On the first line under the account column, we create and add a new account for the property. In the pop-up window, we enter the name as Fix and Flip Inventory and include the location 123, Oakwood Avenue to help identify it. For account type, we choose Other Current Assets, and for detail type, we select Inventory. Click Save and Close. We enter the amount under the Debits column. On the next line, record the loan taken for purchasing the property. QuickBooks already has a ready-made account called Short-Term Business Loan, which we'll use. Enter the loan amount in the Credits column. Next, we'll record the cash down payment. Select Chase Operating Account and enter the amount in the Credits column. Click Save and Close. We'll examine the balance sheet to see the effects of the transactions. We can see the property purchased has been recorded under Current Assets and business loan amount under Current Liabilities. Once we purchase the property, we'll have rehab expenses to cover, so we'll start by depositing funds to handle them. To record each rehab expense, click Create, then select Expense under the Vendors column. In the Category field, choose the Fix and Flip Inventory account, and note the nature of the expense in the Description field. Enter the amount, then Save and Close. Repeat this process for all rehab expenses, including the loan's interest portion. Once everything is recorded, Check the balance sheet to confirm the fix and flip inventory account has increased by the total rehab expenses. After recording all necessary rehab expenses and holding costs and adding them to the property's cost basis, the sale is recorded through a journal entry. On the sale date, the property is first transferred from inventory to cost of goods sold. In the first line, create a new account called Fix and Flip COGS, 123 Oakwood Avenue. In the pop-up window, set the account type to cost of goods sold under expense, and select other costs of services as the detail type. Save and close to enter the amount in the debit column. In the next line, select Fix and Flip Inventory, 123 Oakwood Avenue, and enter the amount in the credit column, completing the transfer from inventory to COGS. In the next line, we record the sale by creating a new account called Fix and Flip Sales, 123 Oakwood Avenue. The account type as income and detail type as other primary income. Save and close. Enter the gross sales revenue in the credit column. Next line, record the selling expenses by creating an account called Fix and Flip Selling Costs, 123 Oakwood Avenue. The account type as expense and detail type as other miscellaneous service cost. Save and close. Enter the amount in the debit column. In the next line, we record the repayment of the short-term loan by selecting Short-Term Business Loan in the account field and entering the amount in the debit column. Finally, record the balancing figure as cash in bank by selecting Chase Operating Bank Account and entering the amount in the debit column. Click Save and Close. The effects of this transaction can be verified in the financial statements. The balance sheet will show zero property inventory under current assets, and the bank balance will reflect sale proceeds after the loan repayment. The profit and loss statement will show the net income from the fix and flip transaction. This wraps up my detailed walkthrough on recording real estate bookkeeping for both rental property investments and fix and flip businesses. I hope you enjoyed this video. If you have any questions or are interested in hiring me as a remote bookkeeper, feel free to reach out at barry77m@gmail.com. My name is Barry Matthew. I am an intermediate chartered accountant from India, a QuickBooks Online Pro advisor, and a Xero certified professional. I offer reliable remote bookkeeping services.